recent weeks, there's been quite a few ads on the TV and on the radio and in newspapers concerning the Boston Tea Party. Well, when I started to see these ads and hear these ads, it got my memory banks working as far as the Civil War and the Revolutionary War. And I went back and I dug out this particular talk that I gave some, I don't know, maybe 25 years ago. So it's an oldie and goodie, but it's well informative. So let me begin by making the statements. The history of taxation in our country begins with the colonial protest against the taxes that were levied by the British government beginning around 1765. The taxes levied would lead eventually to our American Revolution, as many people here know. In June of 1775, George Washington, one of the founding fathers, famously declined a salary to head the Continental Army, insisted that Congress take care of his expenses. When you look at that expense account, the first thing you notice is how well Washington lived on it, which is quite a comical story in that he lived a good life. And all he said very simply to the founding fathers was just pay my expenses. And I'll give a good example. When you look at that expense account, the first thing you notice is how well Washington lived on it. In an average year, he spent double what he would later make as president. You might say that the father of our country is the father of padding his receipts. At first, Washington refused to accept this kind of remuneration, but being the aristocrat that he was, the door was left open. He said, "Sir, I beg leave to assure the Congress, as no pecuniary consideration I could have tempted me to have accepted this arduous employment. I do not wish to make any profit from it. I will keep an exact account of my expenses. Those I doubt not will discharge, and that is all I desire." The auditors accepted every claim. One entry read $20,800. The accounts were not only irregularly kept, but many of them were lost or mislaid, and some of them so defaced as not to be legible. This led to the auditors to believe that the receipts either lost or never existed. That did not bother the Congress. Instead, they lauded him for his exacting arithmetic and gratefully paid the requested amount. In $1780, the Congress paid $449,000. And in our modern day dollars, that amount would be equal to about $4.25 million. Once President Washington tried the same trick, but he was quickly rebuffed by the Congress, and he was forced to live on the $25,000 salary authorized as salary for a president, which caused him to tighten up his belt, and Martha had to tighten her corset. One of the earliest controversies that faced newly formed United States of America involved the taxing powers of the federal government. After all, unjust taxes charged by the king in distant England had been the chief cause of the war for independence. The money necessary to fight this war was raised by the states and turned over to the federal government. The framers of the Constitution have fresh memories of raising an army and running an embattled government mostly on borrowed money. Thus, they gave the government the power to lay and collect taxes, duties and imposts and excises. But all duties, imposts, and excises shall be in uniform throughout the United States. From the beginning, the young nation preferred to raise funds through customs and tariffs in the belief that these sources would discourage imports and protect budding domestic enterprises. But Alexander Hamilton, who was the first Secretary of the Treasury, prevailed upon the Congress to set up a system of excise taxes, and the organization needed to collect them. There was a property tax to the excise tax. So was born the infamous Internal Revenue Service, but not without controversy, both in the savor, but also the violence leading to the Whiskey Rebellion in 1794. Thomas Jefferson, elected on an anti-government platform, got Congress to repeal all the internal taxes, and the government got along in the revenue from tariffs only until the War of 1812. But because of the need to raise large sums of money to finance a major war, led to radical changes in the tax system. Congress levied a direct tax on the 18 states. That's the very first sales tax on luxury items such as the jewelry and silverware. Congress again did away with the income tax in 1817, abolishing the office of the Commissioner of the Internal Revenue Service. Despite pleas from the Treasury Department, the federal government paid for itself through tariffs for the next 45 years. Tariffs have played different roles in the trade policy and the economic history of the United States. Tariffs were the largest source of federal revenue from the 1790s to the eve of World War I, until it was surpassed by income taxes. Since the revenue from the tariff was considered essential and easy to collect at the major ports, it was agreed that the nation should have a tariff for revenue purposes. Tariffs contributed to a split between the North and South. The Tariff Act of 1824 increased tariffs in order to protect the American industry in the face of cheaper imported commodities such as iron products, wool and cotton, textiles and agricultural goods from England. This tariff was the first in which the sectional interests in the North and the South truly came in conflict because of the South advocated lower tariffs in order to take advantage of tariff reciprocity from England and other countries that purchased raw agricultural materials from the South. The tariff of 1828, also known as the Tariff of Abominations, and the tariff of 1832 accelerated the split between the North and South. For a brief time in 1832, South Carolina made vague threats to leave the Union over the tariff issue. In 1833, to ease the North and South relations, Congress had lowered the tariffs. In 1850s, the South gained a greater influence over tariff policy and made subsequent reductions. In 1861, just prior to the Civil War, Congress enacted the Morrill Tariff, which applied higher rates and inaugurated a period of continuous trade protections in the United States that lasted until the Underwood Tariff of 1913. The schedule of the Morrill Tariff and the two successive bills were retained after the end of the Civil War. It would take a major catastrophe like the Civil War to get the country to pay internal taxes again. So begins my story as to how our American Civil War was financed. Lincoln made the decision that the Union must be preserved and that after the loss of Fort Sumter, it must be resupplied. In order to accomplish this tremendous feat of paying for the men and the material necessary to put down the rebellion, Lincoln would need to sign into law revenue-producing measures, which he knew would be the largest in the nation's history. So he would call upon the Secretary of Treasury, Salmon Chase, to implement this great feat. Abraham Lincoln fully expected to borrow money in order to finance the war, and if borrowing wasn't enough, he would order the Treasury to print more money. It's been said he told the Secretary of the Treasury, Salmon Chase, "Give your paper mill another turn." After being told that the Treasury was low, Lincoln was confused about tax law. He was quoted in saying, "I don't know anything about money. I never had enough of my own to fret me." He entered the White House with savings of $9,000 and $5,000 in real estate. In fact, he withdrew $400 from the bank in order to pay for his inaugural trip. During his presidency, he was quoted as saying about his savings, we have laid by some money, and during this term, he will try to save more, but he would not have enough to support us. He would go back to Illinois, and I will open a law office in Springfield or Chicago and practice law and at least do enough to help give us a livelihood. His salary as president was to be $25,000, with $91.66 to be withheld each month. And because of the ruling by the Secretary of the Treasury that presidents and the justices of the Supreme Court were constitutionally prohibited from paying the Civil War income tax under Article 2, Section 1, he received a refund of $3,555 for the year 1863. For that year, he declared outside income of $1,183, taxed at 1%, other than income taxed at 5%. The Revenue Act of 1932 repealed this Treasury decision, and after the death of Lincoln, the estate was valued at $83,343. He left no will, but left papers in good order. Supreme Court Justice David Davis handled the administration of his estate, and when it was finally settled, it had a value of $110,975. He refused the fee of $6,600. Ironically, both Davis and Lincoln were inept about taxation. Modern income tax began the passage of the 16th Amendment to the Constitution in 1913, but the actual beginning of the income tax began some 50 years earlier. The tax on personal income tax resulted in the Revenue Act of 1861. The tax consisted of a flat rate of 3% on all incomes in excess of $600. Western states did not object as they were rich in land and mostly not money. This tax proved too difficult to collect, so on July 1st of 1862, President Abraham Lincoln signed into law that was then one of the most sweeping revenue-producing measures in the nation's history, creating the Commissioner of Internal Revenue Service and the setting and the stage for the modern system of taxation. 3% was levied on income over $600, but less than $10,000, and a tax of 5% on any income over $10,000. The first income tax return was a very informal taxpayer and would have to take an oath of income that was not over $600 and did not file a return. The self-assessment philosophy is still in use today. I brought with you a copy of the 1862 tax return. And I'll pass that around. Yeah, it's 1862. This tax was to be paid on June 30th of 1862, but Congress met it before that date and reported a new bill. The House committee, which reported the bill, made clear this antipathy to the income tax, but under circumstances, one was unavoidable. The tax, their report said plainly, was an inquisitorial one at best, but upon looking into the considerable class of state officers and many thousands who are employed on a fixed salary, most of whom would not contribute a penny unless called upon through this tax. It has been thought that not only to wholly to abandon it. President Abraham Lincoln took a most impressive step to implement the income tax law by appointing a 44-year-old attorney from Massachusetts. One of the things that I've come to learn from my Civil War trips and readings on the Civil War is Massachusetts had a great influence on the entire Civil War in every aspect, in the entire aspect. He appointed a 44-year-old attorney from Massachusetts as commissioner of the Internal Revenue Service. In 1953, it would be renamed the Internal Revenue Service, and his name was George S. Boutwell. Boutwell was not only a novice government and service employee, having served in the Massachusetts legislature and also as governor of the Bay State. He was later to serve in the House of Representatives and the Senate as Secretary of the Treasury. Upon taking office, Boutwell organized the field and office force, contracted for the printing of revenue stamps, wrote regulations, answered inquiries, and provided the framework under which the Internal Revenue Service continues to operate today. He accomplished all of this in less than 8 months. Under the terms of the Revenue Act, the president could divide the country into collection districts and appoint with the Senate's advice and consent an assessor and collector for each district. The assessor was to find objects of taxation and prepare the assessment list that was to be delivered to the collector. The list where the collectors warrant to seek payment for taxes, income taxes contributed more than $2 million for the year 1863, the first full year in which revenues were collected under the Revenue Act of 1862. In 1864, the amount collected was $20 million. And by 1866, the amount collected was a whopping $311 million. Other major contributors to total revenues that year were the tax on manufacturers and products, which yielded more than $36 million, and the distilled spirits tax of over $30 million. Taxes were levied on residents of all states and territories not in rebellion, but the amounts collected was not efficient, as not even 1/4 of the national revenue necessary to fight the war was met. Once the war began, the debt grew by $2.5 million a day. For financing, the Civil War loans were the government's principal reliance. Laws passed in the summer of 1861 authorized large amounts of bond issues and the issue of $140 million in treasury notes with the interest rate of 7.3%, payable in gold semi-annually. They were commonly known as 730s. The bond issues bore the interest rate of 6%. Lincoln acknowledged the troubles with the income tax when in 1864, while speaking before the soldiers from the 164th Ohio Regiment, apologized for the inequities and the practical applications of the tax. If we should wait before collecting the tax to address the taxes upon each man in exact proportion with every other, we shall never collect the tax at all. Believing at first that the war would be short, the administration was reluctant to tax heavily. The South from the start was doomed economically. Secretary of the Treasury Christopher Memminger understood taxation and finance, but he was overwhelmed by the impossible task of raising revenues from $5 billion of the nation's $16 billion budget. But the Confederates would wait until 1863 before they would implement income tax. The rates of tax of 5% for incomes $500 to $1,500 and 15% for the income over $10,000. Both Lincoln and Jefferson Davis were inept about taxation. Jefferson Davis was described as an ignorant of finance, even to the point of grotesqueness. It was obvious that any nation engaging in the war like this would face heavy taxation, heavy indebtedness, and inflation. Secretary of the Treasury Chase knew that little about the national financing, and as in personal life, he lived beyond his means. He consistently underestimated expenses and overestimated revenues. He resigned in June of 1864 to become a Supreme Court judge. I love him all. This law would tax many items moderately rather than tax heavily on a few. Congress searched for more things to tax, but with such ingenuity and tenacity that people complained everything is taxed except coffins. Other examples of taxable items were iron, leather, luxury goods, drugs, patent medicines, whiskey, railroad tickets, telegrams, dividends, interest, gunpowder, feathers, and this one kind of a document had to bear the IRS stamp. Licenses were required for almost every trade except for the ministry, and duties on imported goods were increased. The income tax law was changed to reflect a lower exemption and a higher rate of tax. The novel doctrine of ability to pay came into what is still in use today. The burden to pay shifted from the western states to the eastern states that did not leave the Union were included in the tax base as soon as the federal troops again exercised control. The collection of taxes in those early days was vastly different from today's techniques. Within 20 days of receiving the list from the assessor, the collector gave notice to the taxpayers through the implementation of in newspapers and the notices posted in public places. These ads and notices informed the public that taxes were due and payable. If a person did not respond, the collector served the notice either personally or by hand. If they failed to respond, he had the full authority to seize and sell the assets of the delinquent taxpayer. During the Civil War era, citizens were not used to the idea of paying taxes, and the job of the tax collector was not a popular one. While the collection of taxes is never one bringing great public acclaim, the hazards faced in the early years was especially dangerous. This was true of the new Western territories, which were beginning to open as settlement at the time of the Civil War. Despite the tasks and hazards, the organization created to administer the tax law was successful in accomplishing its task. Tax money collected for the fiscal year 1866 reached $311 million. Although income tax was hardly enough to cover the cost of the war, the Union borrowed 80% of those costs, and objections to taxes were increasing. The elaborate wartime revenue system began to be dismantled shortly after the war's conclusion. In 1867, the country abandoned the system of rate progression in the income tax, and shortly afterwards, Congress cut the income tax rate, and finally in 1872 abandoned the income tax. Income tax became a political issue between those who saw it as an unfair tax levied upon the upper classes by the lower classes. That sounds familiar. And those less wealthy segments of society who looked upon it as a more equitable because of its progressive nature. With that movement, the income tax was repealed. So from then on until 1913, 90% of all tax money was assessed on distilled spirits, tobacco. In 1894, the Wilson Tariff Act revived the income tax, and the income tax division was organized. However, in 1895, the Supreme Court ruled that the portions of the new tax law was unconstitutional, and the income tax division was disbanded. A rehearing by the Supreme Court in May of 1895 resulted in a decision that the whole income tax law was unconstitutional on the grounds that it was a direct tax and not apportioned among the states on the basis of population as the Constitution prescribed. This decision was based upon the tax case argued before the court in March of 1895 and decided upon in April of 1895 of Pollock versus the Farmers Loan and Trust Company. This issue was then apportioned, and income taxes on interest, dividends, and rents imposed by the Internal Revenue Act of 1894 were, in effect, direct taxes and were unconstitutional because they violated the rule that direct taxes be apportioned. The ruling was a 5-4 decision. Charles Pollock was Massachusetts. Charles Pollock was a Massachusetts citizen who owned only 10 shares of stock in Farmers Loan and Trust Company. He sued the company to prevent the company from paying the tax. He lost in the lower courts, but eventually was finally appealed to the United States Supreme Court, which agreed to hear the case. As the dawn of a new century neared, the United States was drawn into the Spanish-American War, which made it necessary to raise new sources of revenue to pay for military campaigns. In June of 1898, Congress imposed taxes on legacies, mixed flour, and occupations, and increased the tax on fermented liquors and tobacco products. It also provided for a number of stamp taxes. In 1898, total tax revenues amounted to $170 million. In 1899, revenue was $273 million. In 1901, revenue was $306 million, but the revenue slowed down in 1902, but the country continued to rely on liquor and tobacco taxes. Upon entering the 20th century, the talk returned to the implementation of the income tax. The major roadblock to implementing an income tax is the fact that the Supreme Court had ruled on that issue in 1895. So in order to have an income tax, Congress would have to deal with that issue. Pressure had been building for an income tax based on ability to pay. Plus, there was a rising resentment against the wealthy. President William Howard Taft worked out a compromise with congressional leaders, and in 1909, in which he made the recommending Congress propose an amendment to the Constitution. giving the government the power to tax incomes without apportioning the burden among the states in line with the population. Together with that, he proposed a 2% corporation excise tax, and this law would remain in effect until 1913. The 16th Amendment to the Constitution moved quickly through Congress and became part of the Constitution on October 1913. The language of the amendment said that the Congress shall have the power to lay and collect taxes on income from whatever source derived, without apportionment among the several states and without regard to any census or enumeration. Civil War income tax established the foundation for 20th century tax.